Puerto Rico gets depicted in the news as a cheap and easy way to save all of your tax dollars with the flip of a switch. That's not necessarily true. So let's talk about the truth behind Puerto Rico tax savings, what you actually save, and what you really need to do in order to reduce your tax bill. And it's going to be an interesting breakdown whether you're actually thinking about making the move or not. So let's just go ahead and jump right in. When Puerto Rico tax programs are mentioned, it's really referring to one of the two most popular programs, Act 20 or Act 22, or Act 60, which is just a combination of those two programs. Now, these programs do offer some awesome benefits, but with that, there is equal confusion about the programs. First question, is it legal? Yes, it's totally legal. Every other week, I swear, there's an article that comes out saying
the IRS is cracking down on the Puerto Rico tax exploit.
Articles make it seem like the Treasury Department is, storming into the island and dragging mainlanders out, kicking and screaming. It's not the case. As catchy of a title it is, like IRS exposes island tax loophole, that's really all it is, a catchy title. Those articles are always referring to people who attempt to get the Puerto Rico tax benefits without living here and following the rules of the programs. If you follow the rules, there's nothing wrong with it. And this actually pairs well with the next point of confusion, the popularity of the program. You think because there's article after article about Puerto Rico tax savings, that it's this ultra popular program. It's really not. According to the IRS, there's a report that shows that there's only 2,300 people who are actually a part of these programs. That's the number of people who live in my hometown. That's a tiny number. I suppose, again, it just seems more popular because it makes for such clickable journalism that we all know about it. But then this is the largest piece of confusion, the actual tax savings. A lot of times moving to Puerto Rico is advertised as this zero tax island where all of your problems go away. And that's not totally the case, so let's dig in. The first program is Act 20. This is also known as the Export Services Act. This is the program that allows a business owner or a self-employed individual to live in Puerto Rico and save a ton of their business's profits, retain those profits. This is especially beneficial in a business where there aren't many write-off opportunities on your normal tax bill. A few examples of businesses that highly benefit from a program like this are consulting services, selling digital content, or really anything that doesn't require a ton of assets, like a YouTube channel. Also, if you happen to be thinking about starting a YouTube channel, you want to check out in the description. I have a school that literally covers everything step by step, how to think of your channel name, how to get over talking to the camera, how to monetize your channel, covers everything. So you want to check that out down in the description if you're interested in a YouTube channel. It's worked out awesomely for me. The reason that I say it's not great for all businesses is because many other businesses have a variety of ways built in to save money on tax. Real estate investors, for example, are notorious for being able to write off nearly all of their tax bill. Also, high growth companies don't see much of a benefit by moving here because they're typically reinvesting all of their profits back into their business, which means very little profit to actually pay tax on. Even for my own moving and storage business, this program isn't a great option because let's say we have an awesome year and because of that, I'm expecting a huge tax bill. I could just do something like buy a new box truck and then depreciate a large portion of that truck year one and save thousands in tax. Now, the idea behind Act 20 is Puerto Rico has taken the position of, well, there's a ton of businesses that can operate anywhere in the world, especially thanks to the internet. And if we offer an incentive for those businesses to move here and then export their services out of Puerto Rico, we will, number one, see a large investment back into our economy. And number two, we're going to be able to collect tax revenue from a highly profitable business and wealthy investors. But how does all this work? Is it really tax-free? And the short answer is no, it's not tax-free. There's a lot of confusion here. Tax is substantially lower, but it isn't zero. In fact, for my business, tax will still be my highest expense this year. So under this program, you get a low 4% Puerto Rico income tax, and there's no U.S. federal tax on exported services. So if you're here operating your business, there's no federal tax. And you also get a 50% reduction on the Puerto Rico municipal tax, which is pretty small in the first place. But with this, you can't just go and pay 4% tax on all your income, call it a day, and just go sit on the beach. You actually have to also pay yourself a reasonable wage, which is taxed at the normal income tax rate. And then on top of this, you have additional filing fees and one-time expenses that should be figured into your effective tax equation to figure out, hey, does this actually make sense? Starting with the one-time fees, we have the application fee, $750, some acceptance stamps for $150, municipal setup fees, $650, notarization of a ton of different documents, but $150 if you have to pay for that. Some areas you don't have to pay for that. Federal background check, $18. Paper and ink from the endless documents that you have to sign and fill out, $10,000. I'm just kidding about that. So the total one-time fee comes out to $1,718 about. That could fluctuate a little bit. And then ongoing fees, you have the annual filing fee of $300, virtual mailbox fee, which is $50 a month. Now, not everyone will need this, but you need an actual non-residential address, so most businesses will. Anyways, that's $600 annually. Additional accounting, there's a lot of additional accounting that's needed. I'm budgeting $300 a month, so that's $3,600 annually. You need new banking, which in my case, to have some additional features, I have to pay $40 a month for that, so that's $480 annually. So that total annual cost is just shy of $5,000 a year. And then you have to pay yourself a reasonable wage with regular tax on that. For my example, that's about $24,000 every single year as well. So let's do an example here. We're going to do an example of $200,000 a year in net income. And I'm saying this because I believe at around $200,000 is when the equation starts to make sense to move and start saving on your taxes. So with $200,000 in net income in mainland US in a state with average state income tax, you'd pay just shy of $60,000 in tax on your total tax bill. In Puerto Rico, you have about $6,700 in various costs in the first year. Then you have your reasonable wage, which has normal tax on it. In this example, I'm doing $75,000. So the income tax on that is $12,885. Then you still have Social Security and Medicare taxes. That's 15.3% of all of your reasonable wage income. That's $11,475. So that's the total of $24,360. And then you have the 4% tax on what's left after deducting your reasonable wage. That's $5,000 in this case of $200,000 in income. Then you have municipal tax, which in my city, it's 0.25% after credit. So that's just $300. And your total cost is $36,360. Savings of $23,640. Pretty good on $200,000 in income. That's about $2,000 a month in savings. Like I said, $200,000 seems to be the line where the program starts to make sense after figuring in higher sales tax here of 10.5% and higher home prices than a lot of areas in mainland US. Now, what's interesting about this program is the benefit doesn't scale linearly as your income gets higher. Sure, that 4% tax rate gets more expensive as you make more money, but other things like filing fees, accounting, and your reasonable wage all stay the same, so you save more once you make more, dramatically more. So if we bump up that income to $500,000 per year, this jumps up savings dramatically. At $500,000 in income, you'd pay $184,000 in tax, where in Puerto Rico, this would only cost you $49,000, a savings of $135,000 a year. That's enough to pay for a $1 million home mortgage plus some, just in savings. Then at $1 million a year, you'd save $332,000 in tax, and it just scales up even more from there. Now, what do you need to do to actually get these benefits? First off, you need to physically be in Puerto Rico at least 183 days per year. Then you need to transfer your business legally, which means new LLCs, new business banking, new business address. Everything about your business needs to move, basically. There are some various ways where you can offer consulting services if you have like a brick and mortar business, but I'm not going to get into that in this video. You also need to pass the substantial presence test, which means you need to live in long-term housing here in Puerto Rico, have a lease, own a home. You need to have your driver's license here. You need to have as few assets as possible in your home state, voter registration here, banking here, all your addresses change, your family needs to move with you. Basically, you need to be able to show that Puerto Rico is your home more than anywhere else. Otherwise, the IRS or your home state, your old home state, might be able to say, hey, you actually live here, not in Puerto Rico. So you need to move everything you possibly can to Puerto Rico. That way there's no question. And then we have Act 22. This is the program where you can actually start seeing some 0% tax rates. But there's always a but. It's significantly more expensive to do this program, and there's more hurdles to cross. So Act 22 is called the Individual Investors Act and offers 0% short and long-term capital gains tax and 0% tax on dividends. Now, I'm actually not part of this program because of how the math works. It just didn't make sense for my situation, but hey, it might for you, so let's break it down. Like I said, Act 22, no capital gains tax and no tax on dividends, but there are a few more caveats to the capital gains tax portion. There's no capital gains tax on capital gains accrued after you move to Puerto Rico. So you can't be like a crypto millionaire, move over to Puerto Rico, sell all your crypto, and then pay no capital gains tax. In that case, you still would have 15% capital gains on the gains accrued before you moved. And there also is another option if you happen to be that crypto millionaire who's looking to move and save on taxes. So if you are that crypto millionaire and you move, but you don't need to sell right now, you could move to Puerto Rico, and after 10 years, then your long-term capital gains rate decreases to just 5% from that 15% rate on the gains that accrued before you moved. So that dramatically lowers the rate as well. Now, what does this program cost? You have a one-time application fee of $2,395. Now you can do that for a little bit less, but that's how much it costs to have a company do the filing for you, which I definitely recommend. And then you have annual costs of a $5,000 per year filing fee and $10,000 per year that you need to donate to a Puerto Rican charity. Now, given the cost, you can see that unless you're doing a ton of buying and selling, like you're a day trader, or you already have a ton of gains accrued that you're trying to sell at some point in the future, this program may not be totally worth it for you. As much as I'd like 0% capital gains, I'm much more of a long-term investor myself, so my actual capital gains tax bill is low, far lower than $15,000 a year. And the biggest advantage for me would be if I were to sell off a business or if I was living on dividends or something, and I don't plan on doing that anytime soon. So given the various fees of this program, it seems to make sense when you're selling more than around $100,000 in assets per year or collecting more than around $100,000 in dividends annually. Plus, with this program, you also need to purchase a home in Puerto Rico within 2 years of moving, which may add even more expense and potential, questions to the equation. So it's just more to consider. So there you have it. The truth behind the island. If you found this helpful, just make sure you hit that like button, hit the subscribe button. Go subscribe to my vlog channel if you want more information on Puerto Rico and living here and some chaos that I'm up to. So I'd like to thank you for watching, and I hope you have a profitable day.